I understand that there is a level of gloom that I think is far out of whack with what we know, which is retail sales were strong, industrial production okay. We're not going into recession. Our country is stronger. I'm sorry to be optimistic. I'm sorry to be constructive, but I think it's in sync with what the reality is, which things just aren't that bad. No, they're not great, but they're not that bad.
Meanwhile, these flow numbers, Jim, biggest withdrawal on record in U.S. Stock funds for the week ended Wednesday. These numbers out of Lipper, and then the corollary to that is the biggest inflow into money market funds again since data began back in '92. That's crazy.
Well, look, you look at this. This is something that Jay Powell, I don't know whether he's got a money fund account, but you're looking at CD rates that are really terrific, and you feel really beaten down this year, and you say, you know what, I can earn 4%. I got a 4% municipal the other day. You know what? I mean, you only need to get rich once, for heaven's sake. There's a lot of alternatives to stocks for the first time, so the money comes out. Obviously, when there's a seller can wreck almost any stock. But that may be the opportunity, because if you take a look at Procter & Gamble, I mean, we had a Target boost yesterday. We know that Procter's doing very well. I know that this is the namesake town of Sarah's, but if you get 4% growth, and you even in a strong dollar, and that stock can come down to 94 on the market, you're going to have to snap it up. You have to snap up Coca-Cola. Again, I'm playing to Sarah's strengths over this week because I actually watch what she does. And they're just whatever. But there are situations you got to buy. You have to buy. And there's situations that aren't working.
Well, those two in particular, Jim, are, I understand the appeal for you because they're defensive plays in a tough market, but they're also showing signs of growth and a turnaround. I think Starbucks, I'm paying attention to what you're going to talk about today, because if the story is better U.S., weaker China, there's no better company to talk to than Starbucks. The stock is down, looks like 4% in pre-market.
Well, look, the stock's had a monster move. And, Kevin Johnson bought a huge amount of stock for the company after the Nestle deal between 52 and 58. Who knows if he'll be back in down here? We're certainly going to talk to him. I think you're right to bring it up. I think that this market is colored by a couple of stocks. And one of the things that's really changed is that we used to expect this market to bounce on FAANG. FAANG is not the bounce. What the bounce is McDonald's, it's Procter, it's Humana, it's HCA. Those are the ones that have come back. And frankly, those are what you have to look to. You can call them defensive. I don't care what you call them. But that's where the money's going, because there isn't enough money to go around for stocks right now.
Yeah, utilities closing at the highest level also since November 2017.
Oh, my gosh.
Yesterday.
And Jim, the list of 52-week lows, the Russell, mid-caps, micro-caps, regional banks, broker-dealers. We saw what happened with transportation yesterday. We saw what happened with retailers. I mean, to your point, people are just not trusting right now.
They're pulling out. I've been using the word treacherous over and over again. I think, remember, the last real public comments that we got from Jay Powell were this alleged walk back. I still think he thinks he's under the impression that things are really humming, because he's looking at the big macro retail numbers we got today. He's under the impression that things are incredibly strong. He has to look at the stock market. There's nothing the matter with looking at the stock market. Love the guy, love him, but he's got to stay a little more focused on what's not working. If he just watched this show, and he might be jammed this morning, who knows? But if he watched this show, I mean, and had a little espresso like I had, this is my first one, what you would say is maybe things aren't that strong. And that maybe, yeah, you got to put the hike through, because it would really scare people if he didn't put the hike through, because he's been talking about it. But he's got to repudiate his 2019 forecast. He must repudiate it, or this market goes down even more.
So the Fed does come out next week. This is not your first espresso, Jim. It's like your 10th.
No, it is. Okay, maybe not. Maybe it's not my...
Tuesday, Wednesday, Fed meeting.
True. I mean, that's a little hyperbole. It's hyperbole. But look where I am. I mean, if you don't have an espresso here, that's like going to Disney World and not seeing Mickey. I'm not playing that game.
Understood. So the Fed, Jim, so we are expecting an interest rate hike next Wednesday. The question is, how dovish of a tone is Powell going to strike? Should the market embrace that? If they signal, look, we're going to slow down, we're going to pay attention, data dependency, we're watching the signals, we see the signs of tightening in the markets, could the market be okay with that?
Well, look, Sarah, I think he has to say, we have still a strong economy because people can get jobs and wages have to go up a little bit. But there are so many offsetting things to that, you know what? obviously we're going to do one more rate hike, and then we really are done. And we got to see what happens, because this is what he really needs to say. We don't want to hurt the economy any more than it is right now, judging from particular parts of what I see and judging from the possibility of a trade war. So he has to incorporate the trade war, and he has to incorporate a lot of the data that we've been seeing in the last few weeks, including car loadings. He needs to look at car loadings. He needs to look at what the transports are saying with airlines down the line. He needs to look at the global growth situation. He has not wanted to do that, but he has to do it. It's a tall order. It's not what he wants to be able to say, but he has to own it. This economy is a little more fragile, but there's still, this is the consequence of full employment, but housing, construction loans. How about the regional banks? What is that saying? Loan losses, the big slowdown in the Permian that's going to come. There's so many places where there's going to be a slowdown that he has to say we have to take stock. Only with the Fed is prudence regarded as being rash. That's wrong. They have to be prudent. There's nothing wrong with being prudent. Our moms and our dads told us to be prudent.